Hi guys, welcome to Gold Price Daily Analysis. Today is Thursday, 11th of April 2019. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. If you are new to Gold Price Daily Analysis, we do advise you to watch our last two videos in order for you to get the best of this video. We are going to start our core analysis right after a quick recap. We have been waiting for important economic data to be released from different countries, and we're going to start with the UK. For the manufacturing production month-to-month for February came above forecasts, and the GDP month-to-month came in line with forecasts, and year-to-year came above forecasts, and for the trade balance figures came below forecasts. Moving on to the European Union, we've been waiting for the deposit facility rate, came in line with forecasts, and the ECB interest rate decision also came in line with forecasts, and the ECB marginal lending facility as well came in line with forecasts. Moving on to the United States, we have been waiting for important economic headers. We got the core CPI year-to-year below forecasts, and the core CPI month-to-month below forecasts, and the CPI month-to-month and year-to-year above forecasts. And for the FOMC minutes, the important thing that we have to say that the minutes mention that the rates most likely are going to be unchanged. For the gold response today, we have seen the gold that benefited of the upbeat data released from UK, which helped to keep the US dollar in the common range and not to move up higher. Also, gold already made it to 1,310 before the FOMC minutes was released, which is a good sign. For the strategy recap, we said in the last episode buy at lows with the targets of 1,309, 324 and 346, and stop loss of 1,288. The first target is achieved, and we are looking for more targets to get achieved. That's all for the strategy recap. We'll move on now to the economic calendar. On the economic calendar for Thursday, we will start from the United Kingdom, and we will be waiting for the RICS house price balance for March with medium importance. Moving on to Germany, we will be waiting for the CPI month-to-month for March with medium importance. Moving on from Germany to France, we will be waiting for CPI month-to-month for March, and HICP month-to-month for March with medium importance. From the United States, we'll be waiting for the following economic headers: the core PPI month-to-month for March, and the PPI month-to-month for March, and the initial jobless claims and the continuing jobless claims. It can be also considered as market movers. That's all for the economic calendar. We'll move on now to the technical indicators. On the last trading session on Wednesday, we have had a trading range from 1,300 to 1,310. Numbers are rounded and the market is still open. We do expect the gold spot to print a close price above 1,307. Numbers are rounded and the market is still open. For the moving averages, the 20 days is 1,301, and the 50 days is 1,307, and the 100 days is 1,285. And for the 200 days daily simple moving average is 1,250. We are basically above all the daily simple moving averages. For the RSI readings, the 1 hour is 61 bullish, and the RSI 4 hours is 69 bullish, approaching the overbought territory, and the RSI 1 day is 56 bullish as well. For the supports and resistance, we have the supports at 1,306 and 1,300 and 1,294. For the resistance are located at 1,312, which is very important, and 1,319 and 1,324. That's all for the technical indicators. We'll move on now to the trading strategy. For the trading strategy, the trend is bullish and the price action is positive for the third trading session in a row. We are above the daily moving averages, all of them, and from the US dollar, we may see an attempt to rebound in tomorrow's session. Something very important to say that the gold most likely to close above 1,307. Important because above 1,307 there is technically no pressure, no bearish pressure on gold. It's totally under the control of the bulls. As the advice, we will say that we are going to stay in the buy side as long as the gold is trading above 1,305. I'm saying this to the people who is planning to open a new position in gold. Open as long as the gold is trading above 1,305. For anyone who opened already a position in gold, based on my advice yesterday or the day before, stay in your position, and the first target has been achieved today at 1,309. We have been waiting and looking hopefully for the FOMC minutes to include any line about a rate cut, which could have boosted the price of gold and moved it at least to above 1,320. But unfortunately, we did not get that. However, tomorrow we are going to we are waiting for important economic headers to be released from the United States, and we are going to also pay more attention, to the price action of the gold in order to assess our new rally in gold. However, that's it for today. Thank you guys for watching this video, and please like, share, and subscribe, and I'll see you tomorrow in another video.